Afshin everyone, and welcome to the Economites, where we have candid conversations on critical issues. My name is Nkosi. Today's date is the 24th of June 2020. Time's run about 4:45 in the afternoon. The reason why I'm telling you all of this is because approximately 55 minutes ago, the Minister of Finance concluded tabling what we call the supplementary budget in Parliament. Now, you might be asking yourself, shouldn't a budget be tabled in Parliament in February and then again the midterm budget in October? You're right. But because of the COVID-19 pandemic, the effects that it has had on the economy, the National Treasury has had to reprioritize and remove and reshuffle the budget in order to respond to the pandemic. So we caught up with Sanele Nkosi from SimWealth, the Managing Director of SimWealth, to give us his analysis and his thoughts on today's tabled supplementary budget. Enjoy. Welcome, Sanele.
Thank you very much, Nico.
How are you, my man?
I'm doing all right, not too bad. It's just a bit brisk, dealing with winter and all. Yourself?
No, I'm good. And I just also like to welcome everybody for joining us. We're also going to make time for questions. So if you do have questions, please put it up there by the chats and we'll go through them. And feel free to ask Sanele anything that you'd like concerning the budget, and I'm sure he's going to answer it. So Sanele, the historical nature of this budget, okay? Like I said, it hasn't been tabled in Parliament in our 26-year history as the Democratic South Africa. Before we get into it, what is your overall feeling behind the historic nature of the budget?
So, with a supplementary budget, I think the big thing about it, it came into effect because of the many things that were out of control of the government's hands. I think more importantly, because of how COVID-19 has impacted us as an economy. That's why the supplementary budget is such an important factor in us moving forward. Had it not been for COVID-19, had it not been, for a lockdown, economic lockdown, globally, I don't think we would have seen a supplementary budget. We would have had our normal midterm budget, and then we move forward from there. But this came in effect because of, those said reasons, COVID-19 and, a global economic lockdown.
And I'd like us to speak a little bit about that COVID-19. Now, you are pretty unique because you have a nice view of the economy, of the market. You're a financial planner, right? Take us into your insight. What did the economy look like pre-COVID-19 and then during COVID-19? What was the effect on small business and what were people doing with their money pre-COVID-19 and during COVID-19?
Okay. So pre-COVID-19, on an economic perspective, we were growing at a measly 1%, which was not adequate for any economy, whether it be a developed economy or a developing economy. Growing at 1% as an economy is inadequate. There needed to be some more stimulus. And there had been conversations, leading up to this year, from 2015 right up to this year about us tightening the budget, us allocating capital more efficiently. And those were things that were in place, or things that were supposed to be in place. Came lockdown, came COVID-19, that changed the entire landscape of things. In that we had to shut down the economy in order to prevent people from, or to prevent this virus from actually obliterating our entire, population. And stopping economic activity then has a ripple effect. You cannot trade. You cannot, be in a position where you are there's no economic activity essentially at the bottom, or at the conclusion to it. And what that then does for small businesses, or for any individual that actually relies on trading, is that there's no income coming in. If you're not generating income as a business, then the livelihood of the business is likely to die. If there are no earnings that are coming in, if there's no income coming in for people as well, then that means there is no economic activity. So businesses or small businesses then got affected in the fact that they did not have any revenue to generate. So that meant that they had no revenue or income coming in so that they can actually pay their employees. And if employees don't have that income, that means they cannot participate in the economy as well. So there's a ripple effect to it. It's not only just a small business that, does economic activity with many other players within the industry, but because it employs people who also contribute or are economically active, that has a much more larger effect on the economy. And that's why we're going to see a contraction of at least 7% in the South African economy.
And can you just explain a little bit more in terms of what individuals are doing with their money? Are they keeping it in cash?
So in terms of, So, okay, I'll do pre-COVID and then, post-COVID. So before we experienced the lockdown, that's how we'll see pre-COVID. A lot of, funds were, in equities, but equities were becoming expensive and quite volatile even prior to COVID, especially on a South African perspective, because, there wasn't much growth. Companies weren't necessarily investing in the economy or investing in, actually making other projects for themselves. So that meant that they sat on a lot of cash piles. And we even saw this with asset managers, changing a lot of their investment portfolios, restructuring them or rebalancing them and moving more into cash. So we saw a lot of, money move into bonds, more into cash, because in any case, there was more return in cash and bonds rather than was in equities because of how lackluster it was actually performing, right? Because prices were so expensive. And then we had the March activity where markets fell completely. That changed the entire landscape of things. And as a financial planner, what we told most of our clients, no, stay invested because you will recoup all of those losses that actually occurred. And that's what we're seeing now. We're seeing a recovery, a V-shaped recovery, which was unexpected, but nonetheless, it's there. So a lot of people now are actually starting to be much more conscious in, the decisions that they make financially, and that prior to COVID-19, there was a lot of spending, and not actually putting away money for such things as emergency funds or actually investing in financial markets. And now people are much more conscious about, making actual proper financial decisions and are moving funds into actually investment strategies, actually, building emergency funds, because it has been quite uncertain as into what is going to happen in the next couple of months. So people are actually becoming more conscious of that.
No, fantastic. You mentioned something about a V. Just to explain to people who might not know what that means, it's when the recovery is as sharp as the decline. So if you can imagine a graph, it almost makes like a shape of a V. I think that was characterized by Cecil. We saw it take a nosedive, but then those who caught it at its bottom, it super inclined. And as a result, people made a lot of money. So I'm just substantiating what Sanele was saying there. But Sanele, going to the actual budget, well, are you happy with it? Are you not happy with what the Minister of Finance said? Just briefly.
So I do have my reservations in terms of it could have been more detailed.
Could have been more detailed.
Yeah, it could have been more detailed, He could have spoken of, any structural reform that is actually taking place. But he didn't go into that detail. He sort of gave us a highlight of where they're thinking and what needs to be done in order for us to actually come out of the situation that we find ourselves in. So yeah, that's my overall perception of it.
And then going to the tax revenue collection, the finance minister said that in February they forecasted that we will collect 1.4 trillion with a T, trillion rands.
Yeah.
And as a result of this pandemic, that forecast had to be revised down to 1.12 trillion rand. Now that's about 300 billion rand shortfall. These numbers are huge. What do you think some of the factors went into us revising down the forecast?
So a lot of that is because funds had to be redirected towards providing relief to the economy and providing more liquidity to the economy when we created the small businesses relief fund, when we created the COVID relief fund. So those funds, that deficit that you see there, as those funds going towards that. And with regards to revenue, because there's also no taxes that were being collected due to the lack of economic activity, that also contributed towards actually us having that deficit of 300 billion. So it was COVID relief funds along with no taxes being collected within the economic lockdown.
So can I ask you somewhat controversial question, because it kind of like it pushes you a little bit, and that I'm going to ask you about sin tax,
Okay.
the tax which is collected from alcohol and tobacco products. Now, during the lockdown, particularly level 5 and level 4, there was a ban on the sale of tobacco and alcohol. How much of that played a factor in us collecting less tax?
It was quite huge. It played a significant factor in that. The thinking with government was that we won't sell these things because they make your respiratory system weak. Therefore, people will be more susceptible to COVID-19. That makes sense. I get it. I understand. However, if we had maintained the rules saying that, fine, these things will be on sale, but we are still in a level 5 lockdown. You can only drink within your home and you cannot invite any guests. That could have, I think, possibly or potentially added 100 billion towards some taxes that they could have collected, and that could have seen their budget deficit in terms of tax revenue that they'll collect move from 300 billion to maybe 200 billion. Who knows? I haven't actually seen the figures that compare pre-lockdown tax revenue to post-lockdown revenue in terms of sin tax, but I think it could have made a big dent in actually addressing that deficit.
Yeah, but we live and learn, right? And expenditure. So we dealt with revenue collection. Let's look at the expenditure. The revenue collection is forecasted to be 1.1 trillion rand. The expenditure, which includes interest payments, is forecasted to be 2 trillion rand. Essentially, we are spending more than what we are earning. What are your thoughts on that? We are living beyond our means. What are your thoughts on that? Are you happy? Do you think that's sustainable? What are your thoughts about us living beyond our means?
Debt is a big problem in South Africa. It's always been a big problem. And because of, for as long as I've been in the finance industry, every time I've ever heard a budget speech, I've heard that, oh no, we have a budget deficit. And that meant that we had to go and borrow more money in order for us to be able to actually spend, we would spend more money than we actually have, right? And right now, our debt to GDP ratio is sitting at 82%, which is not sustainable. So debt can be good, but debt can also be crippling to an economy, especially a developing economy such as South Africa. So it's very important, the minister said a very, very interesting fact in that he said, for every rand of tax revenue collected, 21 cents goes to servicing just interest payments. That's without servicing the capital of that debt. That's without servicing, any other needs that the economy needs, but 21 cents. So that is 21% of our revenue just servicing interest rate payments. That is not sustainable at all, because how then that 21%, if had it been less, could be allocated to such things that we need that are quite important, such as education, such as health. Right now, interest payments cost more in terms of servicing than the amount that will be allocated to our health system. So that isn't sustainable at all. How do you grow an economy when all of the money that you make or a bulk of the money that you collect for that specific country actually goes to debt repayments? That is not sustainable at all. So if we want our economy to start growing, if we want to see more economic activity, then that debt needs to come down drastically. And they provided us with graphs saying, should we actively manage this debt? in the next coming 5 years, we'll see it peak at 87%. And that will be, I think, the year 2024. And by 2024, if it's actively managed, then we'll actually start reducing it and coming to more sustainable levels of debt.
You see, while I was watching this, I was just thinking to myself, what are rating agencies saying about this? Already the big three rating agencies, Moody's, Fitch, Standard & Poor's, they all have our sovereign debt as sub-investment, aka junk status. Now, they are seeing South Africa at the moment. Now, granted, it's during COVID-19, but our debt is stacking up. We're getting debt upon debt upon debt, interest upon interest upon interest. In your opinion, what are rating agencies saying? What are they thinking?
I think they're thinking this is quite unsustainable. I'm thinking they're thinking any person that is going to be investing in South African bonds or in the South African economy will find that their money might not come back to them. So this is that is a very important thing, because we do rely heavily on foreign direct investments coming into the country and actually helping us build infrastructure. Many of the companies that you see that invest heavily in infrastructure, companies like VW, Toyota, any form of mine that actually comes into our country to actually help us grow our economy, that will stop. We'll see these companies move out, building their plants in other countries, and that could harm us. That could take us over a cliff that we can never come back from. So it is very important going forward that we actually do tighten the spending that the minister was actually speaking about, that we do stabilize debt, that capital is allocated efficiently and we are not using it in any way that will see us deter from the direction that we want to go in.
No, fantastic. Thank you so much, Sanele. Yeah. So now let's switch gears a bit. Let's speak about some of the responses that policymakers are actually conducting to fight this pandemic. We saw the South African Reserve Bank. We saw them cut rates. That was it 3 times in a row. I've personally have never, ever seen that happening. What are your thoughts on that?
The first time South Africa does QE, basically, quantitative easing. Yeah, I was quite surprised by that, but at the time it made sense because we needed some form of reprieve. Because there was a lack of economic activity. Individuals such as you, myself, businesses as well, needed some sort of economic relief. And if you are locking down an economy and still expecting people to pay interest at exuberant amounts, then that stifles them. Then that puts them in a much more difficult situation than they would have been if interest rates were actually decreased. It provides more liquidity into the market, and it allows for the banks themselves to have more funds to actually say, okay, perhaps we can make do with this particular reprieve, in that we have more liquidity in our banks. We can actually borrow out more funds to clients to actually help them sustain, or businesses to help them sustain themselves throughout the coming months. Or we can say, okay, you have holiday payments, which we've seen banks come through. An example I can think of was Standard Bank saying that no, because of lockdown, we'll give you a 3-month pay, 3-month relief on your car payments or anything of that nature. And that also has a ripple effect in that, for instance, my parents are property investment people. So they have tenants themselves. So what they said, okay, because we are not paying any form of interest on these properties right now, or we've our interest rates have decreased on this property, we have some similar sort of revenue coming in. That means we can actually decrease or say to tenants that they can pay half of their rent. So it's very important, even on an economic or large economic scale, that decreasing interest rates allows for people to have more money in their pocket, which they can use that money to actually tackle the debt that they currently have, should they have any debt, or they can use that money that is coming in to actually invest or put away for emergencies or anything of that nature going forward.
No, fantastic. I remember someone told me something which I found profound. They said that dealing with your debt is a form of an investment. So I would also say that people who had their necks up in debt, this is a perfect time to actually deal with that, particularly if you look at where rates are at the moment. But Sanele, we heard the finance minister today. He spoke about something called a zero-based budget.
Mhm.
Now, what is that? And what is the difference between a zero-based budget and the previous way how we've been budgeting all along? What's the difference?
Okay. So a zero-based budget essentially is each expenditure that comes in needs to be justified in how the capital is going to be allocated. So if a country says that they need 100 billion for, let's say, the healthcare sector, each and every rand of that 100 billion needs to be accounted for. So essentially what we're saying is that whatever revenue that we're collecting, that is how much we're spending. We're not spending any more than that. We're not living beyond our means, right? So we won't have any form of budget deficit. So if we are collecting 1.2 trillion this year, we are only spending 1.2 trillion. Therefore, everyone needs to be held accountable in how they actually spend their money. And prior to that, what we were doing is that, give you an example right now, we have revenue that we'll be collecting for 1.1 trillion, but we have 2.1 trillion in terms of expenses. And that's how we've been living. And that's how we've been, and that has caused us rather to go and borrow more money just to fund the expenditure, But now we're saying that with the zero-based budget, expenditure is going to equal revenue. That's what a zero-based budget essentially means.
Okay, so it's matching the expenditure and the revenue.
Absolutely. In order for us not to have a deficit, for us to then go and borrow more. Because if we are borrowing more, as said earlier, then we are going to see our debt levels increasing and becoming even more unsustainable. Now, if we're saying that based on the revenue we have, this is how much we're only spending and we're not going to be borrowing, that means our debt is actually then going to start decreasing on a longer term. Our interest repayments are going to move from 21% and actually decrease. And on a larger scale, yes, we'll still have, and if that is actually happening rather, that means the actual tax that is being collected by government is actually being utilized efficiently. And I think that translates to you and I, and that we're seeing actually where our taxes are going rather than, someone's pocket.
Now, to finish it off on my part, Sanele, we've seen South Africa pre-COVID-19 and during COVID-19. I always make a comparison between us and the global average. So we heard that the global average GDP growth, it's actually going to decrease by 5.3%. But then South Africa's decrease is going to be 7.2%. Now, before that, before COVID-19, the global economy was going to increase by 3.3 and South Africa by 0.8. Yes. Why are we underperforming? Because it seems like we grow the least, but then we shrink the most. Why is it that we constantly underperform compared to the rest of the world?
Many reasons. Chief amongst, once again, being we are a developing nation. And because our economy is so open to the world, anything that happens to the world, it comes on in a ripple effect to us and becomes more drastic. I don't know if that makes sense. So to give you an example, because our economy is as open in trades with America and has America as a big trading partner, or the European Union as a big trading partner, if direct or foreign direct investment is not coming to South Africa from those countries, that means we don't have the funds to actually grow our economy, putting money into infrastructure. So a contraction on a larger scale in terms of the global economy will be much more harder hit in South Africa, because we rely on those economies to actually provide us with infrastructure spend or economic spend going into the future. So that's why we will contract at a much more larger rate than they would. And because we are, essentially considered a junk investment country or haven. So that also contributes towards that. So yeah, it's many reasons, and once again, it's very important. If we do not get our debt into much more sustainable, into a sustainable pattern, and we don't actually invest more into the economy and increase our ratings, we will find ourselves in various unsustainable debt levels, and we'll find ourselves being a Venezuela or an Argentina, and that is something we really need to avoid.
Last question on my side. You're a financial planner, and we have a couple of people here who are viewing this conversation between you and I. Any advice on where people should be keeping their money during these uncertain times?
I wouldn't say keeping your money, but I would say make decisions that allow for your finances to be much more sustainable going forward, right? So if you find that you are heavily indebted and you have a lot of bad debts, kill that debt right now. It's very important that you be at a zero, net worth or net asset base, rather than being in the red column, right? So this is the opportune time for you to kill debt, right? After you've killed debt, build an emergency fund, right? It's very important that you allocate your disposable income, or you allocate assets to the things that can actually help you in the future. And because we don't know how long this contraction will last, it could be 12 months, it could be 18 months. Once you've built that emergency fund, then start considering, okay, based on where the economy is and how things are projected to grow by the economy, by investment growth, start looking at your retirement planning needs as well, and see if they are actually going to be sufficient actually by the time you actually retire. It doesn't matter whether you're 26 right now, whether you're 30, or whether you're 35. It is important for you to look at your retirement planning holistically and look at it on a long-term basis. And then you can start looking at anything that's sort of goal-based, in terms of the investing, whether you want to, purchase some form of capital asset or lifestyle asset going into the future. Then you can start looking at those things. But avoid debt, kill it, and build an emergency fund. Those are the top three things I think any individual should be doing right now.
No, fantastic, Sanele. I'm just looking at my chats quickly, and there are no questions. Dumazi, are there any questions from the people that are joining us today? If there are no questions.
No questions as yet. Yeah.
No questions as yet. Okay, then for my last one, Sanele, before we end off this thing, are you optimistic about the future, about the South African economy, and most importantly about the South African individual? Are you optimistic?
I have to be, because I'm a business owner as well. So it's very important, for me to show that optimism. I do believe in this country. I do believe in its potential. I mean, we have a very young country at that, but seeing this young country with a youth unemployment of 50% doesn't sit well with me, and that's the thing that I'm trying to solve as an individual. So I think it's very important as the youth, we find ways of firstly being innovative in the way that we going forward. Even the minister said it. And another important thing is that we invest, in our capabilities as a country. That's I think that sums it up for me. Yeah.
Okay, now I'm seeing.
I see there's some questions.
There are some questions, but we are running out of time. Okay, so we have one here from iPhone. Got like 1 minute left. So I think this is going to be the last one that you kill. We also saw SA's unemployment data come through. So quickly, what's your opinion on the unemployment data?
Once again, in terms of with unemployment being where it is right now, with the lack of economic activity, we will still see it actually increase. The numbers that came out were Q1 numbers. Q2 is still to come out, and that is going to include all of the people that lost their jobs during the lockdown. So that will see, those numbers actually increase more. So I'm saying to people out there, go and start a business if you can, if you have the knowledge. Try and invest in your education as well, because that also helps the country on a long-term basis.